Okay, I've got some historical data for us to go over for inventory watch for September 3rd. And I'm excited to show you guys what I got today. So let's get into it. Um, if you don't know, my name's Amy Garish, and I am a real estate agent here, and I do the inventory watch for the Phoenix Metro to let you know what's going on in the housing market. So let's talk about what we've got. I want to show you guys the rental numbers and what's happening in the rental market right now. We're still seeing rental inventory, consistently has been going up since August, the week ending of August 5th. And so now we're week ending September 2nd. And you can see that we've kind of, we peaked out last week, and this is normal for this week because it included the end of the month numbers, and there's always like more closings and things happening at the end of the month. So we do kind of see this happen here in the numbers. So I'm really interested in seeing like what September is going to look like. We had several weeks of inventory rising in August. So the month over month change from the first week of August to the first week of September is 34.7% increase in inventory in the rental market. And this is both long-term and short-term rentals shown on this graph. You can see that the number of pending listings did start to decrease in going into August here. And so when we see that difference of, pending inventory going down and new listings going up, that is still indicative that rental prices will eventually start to come down. On the next graph that I have for you about rentals, this is long-term rentals. So this includes furnished rentals and Airbnb type rentals out of the numbers. And you can see that this line, inventory is just rising in the long-term rental inventory, as well as we still see the pendings are decreasing and going in the opposite direction. And so this green line here is new listings, right, coming to the market. So it's interesting. And we still had one more hurrah for closings here. And I think next month, because this month we saw pendings go in the opposite direction, I think next month we will see closings start to go in the opposite direction. Because what pending means is that there are renters out there putting in applications and putting their notice in to rent these homes. And the less people that are doing that, the less people that are actually going to close the following month. The other thing that was interesting that we saw, the rental amount kind of peaked in July at 2352. So we saw rents starting to rise going into May, 332, 326. And then we kind of peaked out here in July, and in August rents are down 2288. So we did see about a 2.5% decrease in rents from July to August. And you can see the square footage also decreased, which means that people can't afford the bigger houses, or they're starting to put applications on smaller homes with smaller rental amounts. So something to keep your eye on there. Let's go into housing inventory. So not rentals, but homes for sale. I wanted to talk about a little bit about like, what should inventory actually be? I know for the last few weeks, I've been saying like, oh, inventory is going up, it's going up, it's going up. But I need you guys to understand the baseline of what that really means. So what should housing inventory be for the population size like that we have in the Phoenix metro area, between Phoenix, Mesa, Gilbert, Glendale, all of our metros? We have like, around 5 million people that live here in our metro. And so how much housing should be for sale? The numbers that I've looked at, 35 to 45,000. And these are projected because we haven't seen a balanced market in a really, really long time. So this is my projection on the numbers. And so if we equal that out and we meet in the middle and we say like 40,000 homes on the market, depending on what interest rates are and what buyer demand is, like that to me seems like a really balanced market with really healthy interest rates and healthy people buying, right? We haven't seen these numbers in probably a decade, guys. I just want you to know that when inventory rose in the last recession and the last housing boom, inventory rose like way over 50,000, 55, 56,000 homes on the market. And that's when you saw home prices really start to come down to like $100,000, $80,000. And so we were in the other direction, right? So we had too much inventory and house prices were coming down. And right now, we're not in that, right? Right now, like we should have 40,000. Our current inventory is at 14,503. We are 63% below any type of a balanced market. And we've been like this, like consistently every year, like inventory has just been falling. And there are several factors why this is doing that. And I want to talk about them, but before I do, let's talk about buyer demand, because the market really is inventory and demand. It's supply and demand. That's the basics of our market. So what should buyer demand even be, right? So we talked about what inventory should be, but where should we be for buyer demand? And so as you can see here, like this line is the mean of mortgage applications, right? And this is data set by the Mortgage Bankers Association. This is the mortgage index. And so this line here is kind of the mean of like mortgage applications. And you can see where we're at today. We are well below that mean, right? And so the closer that we get to affordability and healthier, people being able to put, applications in to feel comfortable, even to put a mortgage application in, the closer we get to this mean number, the more healthier and balanced our market is. So we are way below it right now. And we're probably like 64% below our mean. And so if we're 63% below in inventory, 64% below means, like, again, inventory is low, demand is low, everything's low. This is historic that we haven't really seen before. And so let's talk about those factors again of like, why is inventory low? We know why demand is low. It's because affordability is off, right? We're off balance there. It's too expensive. Interest rates are high. Home prices are high, right? We can't afford it with both high interest rates and high home prices. Like something's got to give. But usually what happens, when that happens is like we have like an inventory imbalance going in the other direction, not in the down direction. So we have this decrease in inventory, and this stat that, or this chart that you guys are seeing here is like, this is new home starts. And this is data set from the US Census Bureau. And this really shows us like, every time, home building starts to kind of like over demand, it kind of comes back down. But it always stays pretty close to the mean, right? And it always comes back up pretty quickly. And so you can see like when we had like housing booms, right? Like in the 70s, and we had kind of too much housing starts, happen. And in the 1980s, we had the savings and loan scandal. Of course, they were building houses, right? And then, the 2008 bubble, right? So we had every time though that we had too much housing starting to be built, it came back down, but it always came back up. There was just a few years in between that it was rebalancing, right? And we can see that like this one, it's not just a few years in between that we were rebalancing. I mean, this was probably 2009-ish where we started coming below the mean for new home starts, and it came way down. And I mean, we weren't even close to being above like where we need to be for population growth. in new home building. And so we just didn't build apparently any new homes. And then we saw the rush in 2020, and so we built homes for a couple years, and now we're back down below the mean. And so new home starts just isn't there. So we just simply were not building for at least like a decade or more. In probably 15 to 17 years here, like we didn't build enough. And so, and we were well below this mean, like we were just not building anything for these years here. So to me, this is wild that we didn't build anything, that we were super cautious coming out of the other bubble. We didn't build enough inventory, right? And then bring in Wall Street, bring in hedge funds coming in and buying whole neighborhoods and you know, buying cash, paying cash for houses, you know, bidding against you. You're trying to buy a house for your family, and you have to bid against these cash buyers from Wall Street, and you can't even get a house without overbidding and overpaying for it because there are cash buyers in the market. Because why? Because nobody built any houses for us to live in. So we have no inventory because they didn't build us any. We are fighting against Wall Street on what we're trying to buy homes for our family. We had the interest rate was historically low at 2%. So what happened? Everybody came in that could buy, and like they're all buying second homes and they're buying Airbnbs, and they're also taking homes off the market for regular people. And so there are 4 factors right there of why there's not enough inventory for the average person in the United States to purchase a home. And so that includes here in Phoenix, right? We're seeing this in our market. Inventory is low. They didn't build enough, right? They just simply didn't build enough, right? And we have hedge funds coming in. We're one of the largest rental markets for hedge funds. Buying, and I have more data on that maybe I'll bring out next week, and we'll talk about that. But we have one of the largest rental markets here in Phoenix for these hedge funds, as well as just like Airbnb market, right? We're one of those markets where people come for spring training and things like that. So we have short-term rentals, and we have a lot of them. So we have a lot of things stacked against us why we don't have that inventory. So when I talk about like, the market's turned around and we're starting to see inventory come, like in the last 4 weeks, yes, we have a 35 increase in inventory, but it's still not enough, I don't think, for us to like see balance and for the normal person to purchase a home. So what I really want to make sure I express as you're watching me and you're you know, watching my updates is that you understand where the market is supposed to be for balance and for people to have healthy home ownership. And so I personally don't ever want to sell my house because I don't know if I'll ever be able to afford another one with the way that the market is. And so like I want to hold on to my homes. I felt freely buying and selling before, you know, that, you know, you could always get a mortgage, you could always get down payments and assistance and always get into a home before. And it's just so expensive now that like I probably wouldn't feel comfortable. And I want to make sure I pass my inventory down to my children and make sure that they have homes to live in, right? And so like that's one thing that's on my mind, is that like as much as I say it's expensive to purchase right now, if you can afford to purchase a home, I like would buy another one tomorrow, knowing that we're 63% below any type of a balanced market right now. But again, affordability is always a factor. So it's an odd market, and I'm not gonna lie, it's very odd. But and you can see here, this is what I'm saying when I've been talking about inventory has been rising like every week, like 10,000 to 12,000 to 13,000 to 14,000. And we kind of popped off here because this is week ending Saturday, September 2nd, which means the week ended, the last day of the month was in this week, which was Thursday, I think August 31st. We saw the last day of the month, which means that we always have a surge in closings and things like that. So we kind of saw inventory just kind of equal out this week. I think we'll continue to see it rise going in the second and third week of September. So the total increase was 34.6% increase in inventory month over month. So from the first week of August to the last week, or to the first week of September. And then let's just talk about pending inventory. This is what I've been telling you guys to watch, is the pending numbers. The number of pendings, what this number represents is the amount of buyers that are actually out there in the market running around putting offers in on homes. And as you can see, like every week we saw a decrease 1, 2, 3, 4 weeks in a row. This first week of September, again, we saw an increase in buyers putting offers in on homes. It could be because rate locks were expiring. It's always weird the first week of, you know, the week ending with the last day of the week in it. So we'll see what happens next week, if we will continue to see it either come down or go up. So it'll be interesting to see what's happening there. Same thing with average amount pending. We started to see the pendings, right? So as the buyers were kind of, you know, coming out of the market, it also meant that they were putting offers in on homes that were worth less and less, right? So they started at 540, 530, 550, we had 529. And again, the week ending, we saw that 543. And again, this could be anything, because again, the last day of the month was here. We had rate locks expiring, and people putting offers in on their houses to lock in that rate. And there's always a surge there. So again, it'll be interesting to see the next few weeks, the first few weeks of September, what these numbers are going to do, if they are going to continue to show in the 700s, or are they going to start to go back up to 800 as demand starting to pick up for some reason. I don't think so. I think interest rates are still going to high. I think this was just like the end of the month kind of rush that we usually see. So we'll keep an eye on it and kind of go from there. The average pending ending for the month of August was 539. We started the month at 545. So we did see it come down about $6,000 in pendings. We had 6 weeks in a row where buyers purchased less homes. So it's kind of interesting to watch that. Closed pricing. So another thing that we saw, right, was that we, you know, in July, we were closing homes well over what people were putting, you know, offers in on, right? So if a home was listed for 500,000, you know, we were putting offers in at 550 or something like that. Like there was so much, there was so little inventory that the few buyers that were out there were fighting over it, and they were putting in like multiple offers, and they were closing for over ask price. The less buyers are on the market, the less and less we see that. And we see these two lines coming together now, which means that like what people are putting that like listed for is what they're closing for. So that over asking price, we're starting to see that kind of disappear out of the market. And so again, this is kind of where we've seen the pendings prices happening, and then these are the sold prices, right? So people were pending for a lot more, and again, people were closing for a lot less than what we're pending for. And then again, this number here, always the last week of the month is when most of the listings do close, and some of them were from 45 days prior, which is again why we see this number look closer to the beginning of the month, because that's what people were could have been under contract 45 days ago or 30 days ago or something like that. So I think again, as we go into September, I think we'll continue to see this kind of trending prices at 530, but it'll all just depend on on those pendings, right? Is it starting to turn around and pick back up going into September? I don't know. So that's a strong trend to break. And so we'll see, will this just be a blip because it's the week that contains the last day of the month? And are we going to continue to see buyers back out of the market going into winter? So that's where we're at for this week. I hope you guys learned something new about the factors of why inventory is low. We know why demand is low, and why we're like historically low inventory. I feel like we're just in a housing crisis. There just isn't enough inventory homes for us to purchase, and there's a lot of factors that could be fixed and going into there. So we'll continue to watch the inventory. We'll see, can we get closer to that 40,000 range? I think we'll start to see some less pressure if we can get closer to 20,000. So that's my first goal, is to see, like, will we be closer to 20,000? We went from 10 to 14,000 in just a month. And so, like, let's see at the end of September if we can get closer to 20,000. Awesome, guys. Thanks for joining me. If you want to see any information or data on a specific city around the Phoenix Metro, I'm happy to pull some numbers and talk about it in the next one as well. Thanks. Bye.